of they call it the consumer price index, which is just a big basket of stuff. It's a loaf of bread, a dozen eggs, a gallon of milk, a gallon of gasoline, et cetera, et cetera. And so they track this stuff. So each month they release this. When you see the numbers, it is versus the same month 1 year ago. So when we see the June number just got reported, it's versus June last year. The May numbers were May of 2025. And so there's a couple of big numbers. The main one being the headline CPI. So that is total inflation versus a year prior for the whole basket. So estimate was 3.8, came in at 3.5. And I'll tell you why this matters in a second. So a little bit better than expected. Um, over the last 30 days, down 0.4. Now, a lot of this is mainly due to lower energy prices. Gasoline came down because we're not in the middle. Well, we are still in the middle of a war, but it's not as high as it was. And then core CPI, which is without energy, which can be more volatile, came in at 2.6 versus 2.8. So, why does the inflation matter? Well, inflation is one of the biggest things the Federal Reserve looks at for interest rate decisions. Okay. We're getting some individual stocks here. In fact, I found some big movers overnight. This one, for example, gapping from 2 to 9s. We're going to try to trade that one at the open. I'll show you how in a minute. But the inflation report, the reason to know these numbers is the market loves low interest rates. Lower interest rates mean lower bond yields. Lower bond yields and lower money market yields mean more people going into stocks, right? If I offered you a government bond that paid you 10% a year, you'd probably put all your money in that and say, the hell with the stock market. I'm not going to risk my money. I got to guarantee 10. If that government bond is paying you 2%, you might say, all right, well, that's not going to get the job done. I'm going to go to the market. That's the yield curve in essence, right? Where can I get the most yield of my money? How much, what kind of risk do I need to take on to get more of a yield? And so the Fed looks at inflation because they have two jobs. One is price stability, which means don't let inflation go nuts. And two is healthy employment or a healthy labor market. Don't let employment go to the roof. So if inflation is getting high, right, prices are going up, what do? They raise interest rates because that makes people borrow less, spend less, expand less, shrinks the economy, brings prices down. If the labor market is weak, two people are unemployed, what do? They lower interest rates. That causes more companies to borrow, to spend, to expand, to hire. That stimulates the economy. The stock market wants low interest rates. So that's why we had a bear market in 2022. Inflation went to 7 or 8%. They took rates from 0.25 to 5.25. Everything shrank. Less money is coming into the market. It's going to money markets, et cetera, and stocks came down. So this is a tailwind for stocks. And that's why when we have this, notice that the NASDAQ is set to gap up from 711 to 719. The S&P from a little bit, not a whole lot. And the Dow's pretty much flat. But we are getting a gap up here in some of these indices. If you look at the futures, you can see the NASDAQ up about 1%. Gold and silver obviously rallying here as well. So anyway, that's the big news moving. Gapping up, Clean Spark, new data center deal. Yes, totally true. So we're going to do a couple of things today. I'm going to show you very specific entry and exit rules for stocks. I'll show you the pattern we look for, where to buy, the things that tell you to sell. And my goal is to look for these kind of swing trades. I'm looking for stocks, I can capture 15, 30, 40% over a couple of weeks, couple of months and move on. So I'm not looking for stocks to buy for 10 years and hold. I'm not really day trading either. I'm kind of looking for those swings over a couple of weeks or a couple of months. And I'll show you how to do that. It involves following the strength of the market, seeing where money is flowing, and then finding these very precise buy and sell points. Now, on these very fast movers, I always do something fun and try to trade some of these this morning, okay? So we'll put a few grand into some of these if they hit our rules. I'm going to teach you what's called the opening range breakout strategy. It is not for every single stock. It is designed for these stocks making big overnight moves. This one's up 40% overnight. This one's up like 400% overnight. Lots of leverage on Taiwan Semi. Let's remove that. Vision's up a little. These are penny stocks. There's Clean Sparks. This would be a perfect one. So it's gapping you see from 1230 to 1477 on a data center deal. And so fuel cells up. No, it's only up like 5%. Well, you're right. No, two. Yeah, you're right. 9%. Sorry. You're right. Okay, so how do we trade this? How do we do? Well, let me show you a very, very simple strategy for stocks gapping up higher. And we're going to go into the leading groups and all that stuff in a minute. But let me just show you this real quick because I want you to see it before the market opens in 24 minutes. When a stock gaps up, meaning it closed yesterday here and it is opening way up here, that is the gap, okay? It's moving overnight when the market is closed. So if you owned it overnight, you're waking up with a big gain. If you didn't, this is the new price to trade it. When a stock gaps up like this, it's going to do one of two things. It's either going to do what I call a gap and crap, where it opens up here and everyone takes advantage. They say, oh man, I'm up 30, 40% overnight. I'm going to sell. And they drive it back down. Or it is a gap and run, where the thing opens up here and this is just a start of something really big. And all this has to do with supply and demand, right? All we're trying to do is interpret what the big investors, the big institutions are doing with that money. If this is in fact the start of a multi-week, multi-month, potential multi-year run in Clean Spark, they're going to see this gap and go, that's nothing. That deal changes everything. It's worth way more. And they're going to buy, even though it's up 30, 40% overnight. Okay? If, on the other hand, it's an overreaction, they say, all right, the news looked good. It drove up overnight, but this doesn't really change anything long term. It might add a couple $1,000,000, but it's not going to be a game changer. This is probably the best we're going to get. They're going to take advantage of this gap and they're going to sell it. And so we want this one and not this one. So here's how we trade that. What we do is we go down to a 1-minute chart, or I guess a 1-minute chart. So this is the gray area is what happened overnight. So see, this deal came out at like 4 a.m. Stock surges. It's up in here. And what we are going to do is bracket the first 5 minutes of the morning. Okay. So when the market opens at 8:30 Central, we get 1 minute, 2 minute, 3 minute, 4 minute, 5 minute. And we're just going to bracket this area. This is the opening range. And we want to give it a couple of minutes to trade around. We want to see if they're going to sell it, they're going to buy it. And it's very, very simple. After those 5 minutes, we are going to buy if it breaks above the high of the opening range. And then we're going to place a sell stop here at the low. Okay? And so that's going to give us a risk of only the opening range. In this case, it'll be about 2%, assuming it trades like that. And what this does is allow us to come in with a pretty tight risk. You're talking about a stock that moves 8.5% per day on average, right? It allows a trade a very tight risk on a potentially very fast-moving stock. Now, if it does that at 5 minutes and then does this, we're not going to buy it. It has to break above our buy level here to get us in. Okay? And it's possible it hits this and then rolls over. We get stopped out and take a loss. This is not a strategy you're going to have an 80% win rate. In fact, it's probably going to be more like 25, 30, 35%. But your risk reward is going to be phenomenal. And some of the biggest moving, in fact, most of the biggest moving stock runs started with a big overnight gap. And so our goal is not to win 80% of the time. Our goal is to get into some of these where we risk 2 or 3 or 4% and we made 20 or 30 or 40. And what I like, if it's going to work, right? If it's going to be a gap and run day, what I want to do is kind of have this range I'm risking, let it trade around, it breaks out, I'm buying here, and if it's going to be a gap and run, it will likely run for most of the day. And then you get down near the close, you take a lot of it off, you take some profits, you bring your stop to break even, and you have no risk. You've made a few bucks during the day, and you get a free look at CleanSpark. If it runs for 3 months, you got no risk and you can ride it up higher. Okay, so that's the opening range breakout. It is not the end all be all. It is simply a strategy for these stocks that make big overnight moves. Make sense? Okay. On a daily chart, will it show a gap at open? Yes, it will. So this is the daily chart. You can see um, this right here was Monday's candle. You're going to see a big gap when it opens up here. This area between is the gap. All right. Okay. So outside of these big overnight gappers is not the end all be all. Where's the money flowing in the market? Well, one of the easiest things to do to stay in front of the leadership, in other words, to stay where money's flowing, is to track which areas of the markets are rising the fastest. And this is really, really simple. Big institutions, your Goldman Sachs's, your Magellan funds, your Warren Buffett's, right? The Black Rocks, they're moving billions of dollars at a time. They're the ones moving stocks, not you and me. If they're all buying something, it's going to go up. If they're all selling something, it's going to go down, right? That's just basic supply and demand. It's an auction. That's how it works. And so, how do they invest? Well, they invest thematically, right? There's a reason all semiconductors have run the last couple of years. There's a reason all the memory stocks, your Microns, your SanDisks, made huge moves at the same time. Stocks tend to move in groups. SanDisk is on a generational run, right alongside Micron, which does the exact same thing, these memory stocks. What are the odds that all the memory stocks made the biggest moves of the decade all at the same time? It's not a coincidence. It's because, excuse me, big institutional investors investing in that theme. And the reason for the memory stocks is this. AI was the big boom. Everyone ran to NVIDIA, who makes the GPUs, and all the pre-IPO money is going to OpenAI and those companies. And then we shifted to agentic AI, right? Suddenly we have AI agents. And instead of just a chat bot, you come in and say, okay, I want you to research these companies, build me a spreadsheet of all this stuff, remind me at the end of the day to check the stock prices, draft this email, build a PowerPoint, et cetera, et cetera, et cetera. And to do that, it's not just the GPUs, it needs tons and tons and tons of memory. It's to hold all this information. Wall Street saw that. That was the new demand, and so they piled into the memory stocks, the Micron, the SanDisk, et cetera. And so they're the ones driving prices. They have better research than us. They're not smarter, but they've been doing this for decades, and they spent $10 million on research. They talked to all the experts, et cetera, et cetera. Okay, so all I'm trying to say is whatever they're buying big is going to go up, whatever they're selling is going to go down. So if we can see which areas are rising the fastest, which sectors are outperforming the others, we know where to focus our efforts. That's where the stocked pond is, okay? Instead of going out in the middle of the ocean and dropping a line, we're going to a stocked pond where it's full of largemouth bass, where all the stocks are rising. Our odds are going to be better there, right? So what are we seeing leading this market? Well, it had been semiconductors for several months. It's still leading over the 6 and 9 and 12-month periods, but we're seeing biotechnology rise up off the ranks. We are seeing cybersecurity start to come back, right? We're seeing insurance for some reason come up here. And so if we limit our search pool to the leading groups in the market, we're going to have much better odds. It's all this is a game of odds. Are we in a bull market? Yes. Okay, my odds of stocks going up are better. What are the leading groups? What's rising the fastest? Biotech, cybersecurity, semis, whatever. Okay, my odds are going to be a lot better of winning if I'm focused on the areas going up the most, right? And then, how do I know when to buy these stocks? Right? What's my buy point? Why did we buy Micron right here at 480 right before this parabolic move? Well, it puts in this pattern that we want to see. And this is our go-to breakout pattern. I call it a shallowing base. Mark Minervini does a lot of this. He calls it a volatility compression pattern. The IBD crowd kind of calls it just a base. Like lots of ways to look at it. But very simply, what you're looking for is for a stock to, let me put this in log scale to even it out. You're looking for a stock to make a big run. This is where it's leading, right? They're all buying in. The demand's very high. And then you want to see this little shallowing pattern over a couple of weeks, a couple of months on the chart. Now, this one went pretty deep over here. It stopped shallowing. Why did it go deeper in March? Well, we declared war on Iran. We started dropping bombs. The Strait of Hormuz closed. Everything changed. So everything went down here, right? We have to take that into context. Without the war in Iran, it probably would have done what it was doing, which is something like this here. Okay. So just, take the big macro picture into context. But the shallowing is what's crucial. That's what shows us the supply is being sucked up. Those big institutions we talked about, your Goldmans, your hedge funds, your endowments, your pensions, they're gobbling up that stock. They're buying all the shares they can at 300 and 340 and 350 and 400, trying to build that large position. And so it's just a function of supply and demand. When demand outstrips supply, when there's more buying and selling, it's going to go up and vice versa. So why here? Well, what happens in this area here is the supply, the available number of shares out there in the market has shrank. You've been buying and buying and buying and buying. And people talk about, oh, they ran my stop loss. There's some of that going on. Oh, they manipulated the market and had an analyst downgrade the stock. That goes on. They go on CNBC and say, this market's too lofty, it's too high, it's going to fall 50%. BS. They're just trying to buy the stock. And so they're sucking up the supply. And that's what shrinks these setups here. So let me find let me find a good example to kind of show you. All right, Natera is a pretty good example. So look at this pattern in here. I'm going to take the volume off, just try to make this real simple. Okay. See how it comes down and they buy it up. And then it dips and they buy it up. And it dips and they buy it up. And see how these pullbacks get a little shallower each time, right? This initial drop was like 23%. This next one here was about 16. This one is still about 16. This next little dip was about 9. This last little dip here was about 6. See how they're getting shallower and shallower and shallower? That's fewer and fewer shares for sale. They scared everybody out. They've done it. There's fewer and fewer sellers at each wave. And so what's happening is the supply is being absorbed, right? The stock is being concentrated into the, quote, strong hands. Institutions don't use stop losses. They're building up position to hold for 3 months or 3 years or whatever. And so we want to buy here as it breaks out of this pattern, because that's the point where demand is still high, but they've sucked out the supply. You get the same number of buyers chasing a much smaller pool of stock. That's what allows these to make big runs very quickly like this. Okay? It's not that suddenly everybody wanted shares in Natera. It's that they built a line until they've gotten all the $200 and $220 stock they can get their hands on. And now if they want more, they got to pay $240 or $260 or $280. That's what allows them to make fast moves. So if we have, let's just take this top to bottom. If we have a leading group where money's flowing, we have a bull market that's prices are rising, and we have a stock in that leading group that is completing this shallowing base, that has been absorbing supply, that now has a very small float of shares. Well, then when it breaks out, that's when we want to buy. We risk a 7, 8, 10% and look for a nice burst higher. Okay? How do you scan for these? Well, Stephen, interesting question. We have been working for the last 3 months on what I believe is the first piece of software that actually does scan for these. It's still in beta. I'm working through it now. We're building software that can scan for this pattern, high tight flags, like 30 or 40 different other patterns. And then you can filter that by group. This is going to be like game-changing software when it's done, but we got some smart guys working on it. Right now, we're searching with our eyeballs. But this is how you put the odds in your favor, right? And I'm not trying to Monday morning quarterback here. I'm just kind of showing you some that have played out this way. Now, I think is setting up. I think we're a little bit early. It hasn't quite run yet, but it's a biotech name. It saw huge demand. Look at this move over here. Okay. Back here in February and March, it ran 150% in 2 weeks. You and me ain't moving the stock 150% in 2 weeks, right? That's big demand coming in. So we want it to absorb that supply and see how it is kind of coming in and shallowing and tightening up here. So when this thing finally breaks out, I'm going to want to buy it. But let's say this thing gapped, right? We're watching this, news comes out. We're like, okay, it's my watch list. I want to buy Iova if it breaks out here through 4.5 or 475, whatever our number is. We're watching this. We're being patient, and then it opens up in the morning at $6. Well, we were going to buy it 470. It's at $6. That's when we do the opening range breakout. That's when we dive in here and go to a 1-minute chart and try to do the strategy I'm going to show you this morning. Just kind of running through these. Now, see, this one is a buyout. See the gap there? When it gaps up and just sits there, somebody bought this. I guarantee you it was bought out. Let's see what the news was. Oh, whoops. That's not what I need. Well, I need to go see it. But anyway, it was bought. Let's see. Biotech takeover. There it is. Okay. Anyway, let me bore you with that. Moderna. Biotech, I'll be honest, is a bit of a tougher group. These are far more volatile stocks. They do a lot of overnight moves on, drug trials and stuff like that. So it can be much more difficult. If this is looking tricky, it's not usually this hard. Biotech is probably my least favorite sector. It has the most number of stocks. It's the most volatile. It can be tricky. Let's look at some of these others. What are the other leading areas? Cybersecurity. Let's see if we can find some cybersecurity stocks here. I think I got a list. Oh, I don't. No. Okay, hold on. Let me see here. Mumu has a good theme list. Let's see if they got there it is, cybersecurity. Perfect. Okay. I'm going to steal all these names and import them. And if you want this list, I'll shoot it to you here in 10 seconds. Let's create a new list. Cybersecurity. Now, if you find an area that's really strong and you're like, how do I find the stocks? You can just Google the ETFs and all of them report their holdings publicly. So you can just steal the cybersecurity list from Wall Street professionals whose entire job is to build a basket of the best cybersecurity stocks. Just Google cybersecurity ETF, go to their page, click holdings, and it'll show you all their stocks and what percentages each. And you can just add them in just like we're doing right now to build you a list. And that way, a month, a year, a decade from now, cybersecurity is hot again. You've already got a list of cybersecurity stocks. That's why I have all these. I just do this when I'm looking for something. All right, so there's a cybersecurity list. What'd that take us? 9 seconds. All right. Okay, this one I was looking for. Notice it never broke out. This was a pretty good rounding off the bottom. We got a little carried away. Some kind of news must have happened in June. It was looking nice. It kind of broke out and rolled before it came. So that one probably would have stopped me out. Let's see. INFY looks terrible. Sentinel 1 looks strong. A little kind of all over. Who's Allen? No. All right. Checkpoint Software. Now, the same breakout pattern I showed you, that shallowing off the lows is at the top, is exactly the same thing we look for off the lows. Same principles apply. If a stock goes from 230 to $100, who's in charge? The buyers or the sellers? The sellers. Supply is outstripping demand. And that's going to be the case until that changes. It's going to keep falling until demand finally outstrips supply. So we want to see that supply drying up, right? We want to see buyers coming in. So exact same pattern. Some of our biggest wins came from stocks we call a rounded bottom off the lows. We buy it when it breaks out there. Our stop loss is there. So we're only risking 8 or 10%. And you'll catch the turnaround on the move back higher. Okay. So I like checkpoint. Would I buy it today? No, I want to see it complete and break through 140. Now, Fortinet didn't give us much of a chance. It just took off to the races and never slowed down. Same thing with Varonis. It's just surging. Zscaler. Now, this is a great example. We must have shown this in previous, but do you see the same pattern? And again, I'm not trying to go woulda, shoulda, coulda. I just want you to see how this stuff works. Is every stock in this group going to follow this exact same pattern perfectly? No. You got to be picky. We're trying to get all the odds in our favor. That's not going to happen in every stock every day. But when you see this, see how clean that was? See, you had your gap. It was a gap and run buy. It made a huge run from 200 to 310, put what we call a high tight flag right in here, breaks out for a second run. And it's kind of doing it again. If this breaks out through 340, I'd probably buy this again. Datadog. So not a perfect like big base like we had down in here. You can see the action, see how down here, not a perfect one, but that same kind of shallowing action coming in, right? So we've had this move, and we just had this little flat base. So I think this one would probably be viable on a break above 275. Right now it's gapping lower, but it's one to keep an eye on. And I gotta have to do this each morning, or you can set alerts. This is Octa, which made a nice little high tide flag. Cloudflare still volatile. CrowdStrike. Eh, no interest in this one. I want to wait until it bottoms. It might be starting to bottom, it might be going down to 10. I don't know, but I want to wait. If it does this, I'll look to buy. And on these big stocks, those two patterns can do you everything you need to know. One is the rounded bottom or the shallowing base, whatever you want to call it, kind of in here. The other is a high tight flag. When you get a big 90% move, it then puts in this little flag and you buy it when it breaks out. I'll trade either one of those in leading stocks and leading groups in a bull market. For that trend, just ripping higher. No stop and go. No pass and go. Right. Tightness there. Cisco. Not a lot in here this morning. Let's go back to our gappers. I want to see if any of these are going to make big moves for us. NXTC agreed to stock for stock merger with Avere. Okay, so this is done. If it's a merger, they're buying it out. It's going to gap here to 918. It's just going to sit here for a month until the deal completes, and then it'll be delisted and go away. This is probably not on our list. Link Home launches OpenLink AI compute platforms. $10 million enterprise AI compute deal. Okay, this could move the needle. It's up 45% pre-market. We're going to watch this on a 1-minute chart. Redwire. Everybody loves Redwire. Absolute dog. It was a huge mover back in May. It's given it all back in June. So just think of every stock in terms of supply and demand, right? Think about this as a house. It's on the market for 500 grand. They cut it to 400, to 300, to 200. Nobody's buying this dump. If it was in demand, a discount would entice buyers. If it is down 70% in a month and going lower, nobody wants it. I don't care what the earnings are. I don't care what the sales are. I don't care how charming the CEO is. Nobody wants this stock right now. Is it possible some piece of news comes out and it rips back? Sure. But right now, there's no demand. It's no more complicated than that. This is a real penny stock. That one's probably too thin. Okay. Market's open. All right. We're going to go to a 1-minute chart. Okay. I'm going to turn the just regular trading hours. You can see the gap. All right. So all we're going to do is bracket the first 5 minutes. And I'll just adjust these as we go. We're in minute 1. And then we'll set orders to buy the break of the high if it does it. And we'll just take a couple of these. Now, there is no guarantee they gap and run. Like I said, if this news is not big enough to really move the stock, if it's a doesn't have any real, if it didn't change the long-term outlook of the company, people are just going to sell. They're going to say that's good enough. I'm going to take it. This is a double daily. I'm going to move that. Wow, look at that. So that's a penny stock. We're going to move that. All right, Vision Marine. Bracket that one. I'm going to place some orders on these, okay? I just want to give it a few minutes. We got to let it trade for 5 minutes. Link home. Just letting the sellers get out of the way. Letting the people who want to sell, sell. Yeah, so this is just going to sit right here. That's a buyout. That one's done. So we got LHAI. We have Vision Marine. Clean Spark. See, it's creeping lower. That's fine. Like, let the sellers get out of the way. If it is going to run, we need them to get out of the way. Some of these will trigger, some will not. Some will make money, some won't. That is totally okay. I mentioned fuel cell. All right, we can do fuel cell too. Let's add it to our list. Now, by the way, guys, if you are not already a Black Ops member, do yourself a favor. Go ahead and go to that link in the description. It's just tradewithross.com. Get signed up. It's $5 for the entire year. No strings, no renews at a higher price. It doesn't even renew. It's I swear to God, there's no strings. If you want to upgrade to a lifetime, you can do it. But for that $5, you can join my Black Ops membership. We do these live sessions every Monday. Right now, they're on YouTube, but we may have to switch them back to Zoom. If so, it'll be members only. You'll get that every week for a year, an hour with me. We do another live session every Thursday with my analyst for an hour over Zoom included. You'll get access to our industry strength indicator. You can put on your trading view charts. You'll have it for life and track the leading areas. You'll get my weekly newsletter. Hit your inbox every Friday. There's several bonus reports. You get access to my support team. It is a ton of stuff. It is $5, no strings. So just go to tradewithross.com, get signed up, and I promise you'll be glad you did. Okay? All right, fuel cell. Getting some legs here. It's 833, 834. I like to give it the 5 minutes. Some will do like a 15-minute opening range breakout. I think that's too long. I prefer to work on about a 5-minute. Now, the tough thing is, how wide is that opening range? Because right now we're at 7%. I want to keep these tight. This is not very tight. I'm going to take 100 shares of fuel cell. Now, where's my stop? Down here at the low, right? The low is 2057. So I'm going to put a stop loss, a sell stop at 20 and a half. I'm only risking the opening range. So what we have now is 100 shares long up here. And I probably should have given it the full 5 minutes. I just kind of jumped in early. And then a stop down here at the low. What's the range on LHAI? It's going to be about 8%. All right. Give me 1,000 market. Oh, come on. No trading permission. Well, I don't have trading permission on this. All right. Let me just scrap LHAI. All right. BMAR. Hard to borrow. Don't care. Give me 1,000 shares. 5,000. 5,000 shares, and I'm put a sell stop at the low, about $1.70. Now, these are not all guaranteed to work out, okay? Do not take this as the end all be all only way to trade stocks. 3, 4, 5. Okay. 3, 4, 5. Now, Clean Spark does not look like it's going to gap and run. Looks like it's going to gap and crap. We're going to see. Tower Semi. Okay, this one's nice and tight. So the high, 274. And the low, 266. So here's how I do this. A buy stop at 274. I'll just do 50. That's a lot. 50 shares here. And a stop at, what did I say? 266. We'll attach a stop at 266. Okay, so there's our bracketed order on Tower Semi. Just a hair. Okay. So if it breaks out above 274 and a quarter, it's going to buy. If it does that, when it triggers, it will automatically put a stop loss in, giving me this risk of just 3%. Okay, this is what I go for, these tighter moves here. 2, 3, 4, 5. Okay, so I'm trying. Let's go ahead and set this one at the high here. Okay, so this one kind of came inside 3, 4, 5, poked its head out. Let's make it break the high. So the high is 510. A stop just means if hit. A stop order. A buy stop means buy if it gets up to here. A sell stop means sell if it gets down to here. Now this is a 20% wide opening spreads. I'm not going to place a whole lot of. I'm just going to do like 1,000 shares here. I don't want to give it too much risk. I'm going to tighten this one up as quickly as I can. I'll put a stop at 410. Just day orders. These are not good till canceled. I only want to buy these if it does this. In fact, probably the next 30 to 45 minutes. Shoot, we missed. Oh, would this one not let us buy? We missed this one. 8,000 shares. Let's see. That takes a. All right, so you see how I'm late on that one. Now I was late. I was watching too many stocks. That I should have been long from 146. My stop is going to be down here at the low at 138. I'll put like 137. Give it a penny. All right. All right, we're in fuel cell. Not up much, 40 bucks. I didn't buy much of this, did I? 100 shares. Oh, I didn't buy very much. Shoot. Okay. All right. Let's see this one run. BJDX. Terrible fill. Again, should have bought in here. I'm trying to do too many stocks at once. SHPH, orders bracketed. Tower Semi, orders bracketed. Clean Spark does not look like it's going to be a player. And then VMAR up around 500 bucks on. Also got that one. Yeah. 1, 2, 3, 4. Okay. Jumped out a little bit early, but that works. Tighten this up a little bit. Okay. Why are they gapping up? So a number of reasons. There's 6,000 stocks out there. If good news comes overnight, meaning between when the market closed the day before and opens here, the stock can gap up pre-market based on that activity. It could be a big earnings beat. An earnings report came out before the market. It could be a big data center deal, or a drug trial went well, or a new CEO was appointed, whatever it is. But we only looked at the big gappers, the stocks that were gapping up 10, 15, 20%, like a 2 or 3% gap. I don't care. That happens all the time. I'm looking for something that could really move the needle for this stock. And my goal is to let this thing run a little bit and then tighten it up as quickly as possible. As quickly as I possibly can. I want to get into a position where I can no longer lose money. And I'll be nailing down profits if I get the chance. Clean Spark, yeah, it's just not showing lots of signs of life. Fuel cell has a gap down. No, it gapped up. So this is where it closed Monday. This is where it opened today. That's a gap up. Okay, so it gapped. The price this morning is higher than where it closed yesterday. This one's really, really wide. I really don't like this. I probably wouldn't take it. In fact, if it breaks out, I'm going to raise my stop all the way here to 460. Only because look at the distance here, 20%. Our whole goal with this opening range, oh, excuse me. Our whole goal of the opening range breakout is to risk less, right? It gapped up 50%. It's a massive move. This very well could be all it's got, which is why we give it a few minutes to trade. Now, BJDX is doing exactly what we want to see, right? It traded around for 5 minutes, broke the opening range, and is now pushing higher. Same with fuel cell, though it's kind of running out of speed quickly. But I am not just forgetting these and coming back in a week and seeing what happened. I am very active on these in the morning, on these gaps. Okay, so $900 on this one. It's only been about 6 or 7 minutes. I really don't want to let that go. So you have two options when you start getting up. Sell some to reap some profits, or tighten your stop to where you're going to risk all your profits. You're not going to take any loss, right? So there's really no wrong way. Let's see. All right, $1,000 on this. What's the move? So our risk was 10%, which is pretty high. Okay, I'm going to go ahead and sell half of this just because it's running, right? I'm going to sell, market, 2,500 of these shares. I'm not trying to short sell, you idiot. Oh, it's going to make me close the whole thing, isn't it? Sometimes in length, see, this is hard to borrow. I'm trying to sell. I think I'm trying to short sell it, and I'm not. So maybe just tighten the stop on this one. So let's bring it up to let's move our stop up. Let's just go to break even with it. So this is when you have a decision to make. You're up $1,000, right? Do you want to risk the 1,000 to see if you can make 2,000 or 3,000, or do you want to just take your $1,000? And only you can answer that. Now, generally, you want to be making a multiple of what you initially risked, right? You don't want to risk 20% and take profit at 5. So I'm up about double what I risk now. I could easily take this. Clean Spark's probably not going to happen. Tower Semi, not happening. This one not happening. BJDX is up, although I took a tiny position. Fuel cell pretty flat. This is clearly our winner. We're up $1,300. Push 220. Give me a partial. Oh, here we go. Partial close. Okay. All right. So this is good. So now I'm at 2,500. Now, look, what we've done is we've realized a P&L. Well, it includes the others, but we've just taken a $600 gain on this. It killed my stop loss. Let me make sure it's not. Hold on. Okay, it canceled the full stop loss. Okay, so what I want to do now I have no risk. I've made $600, right? So I can put in my stop. This thing's running. I can put in my stop on the rest. I just put it at like $2, right? And we've locked it in. So now we've made 600 and something bucks in the first half. We're up 700 in the second half. We're locking in about $100 here. So now, worst case scenario is this stock falls off a cliff, comes crashing down, and we only make $800, and it took us 15 minutes to do it, right? I tend to get very aggressive with these. And when I say aggressive, I mean like I'm just tightening this thing up. Think about what we've seen here. We have a stock that gapped up 30% overnight. It then ran another 25%. So this stock Since yesterday, whoa, that was fast. Wow. That's why you tighten your stop. Big sell came in. See that? All right, so we're out. We're out of VMAR. I probably took it up too tight. Look at the size of that sell, though. Somebody just came in and dumped up 1.7 million shares in about 5 seconds. So we just netted about $900 to $1,000 on VMAR, right? That a boy made $500. Okay, so listen, VMAR could go to $5 today. It could also go to 20 cents. I have no idea what it's going to go, nor does anyone else. You could absolutely put in a trailing stop, Miley, who mentioned that. Absolutely. But, I maybe it's a flaw of mine. I cannot let a 20 to 30% gain in 15 minutes go away. I just can't. I'm happy to get stopped out right there and make a quick $1,000. If it doubles from here and go, oh man, I could have made 5,000. I don't think that way. Now, what do we see in Clean Spark? Is there any chance it's going to run up and break? Probably not. It's been trading for 15, 16 minutes. Clearly they're selling. TSEM, still kind of chopping around. Shuttle Pharmaceuticals, also just kind of chopping around in here. May not be a buy. This one's come back. Now we're down $50. Let's just tighten this thing up. Fuel cell's pretty flat, or like $9. So again, I only want if it's going to gap and run. There's no reason to just come all the way down here now. Okay, so I'm just going to bring my stop way up here. I know my odds of winning big in this trade are now way, way, way down. But now my risk is a whopping 1%. If it wants to keep running, run. If not, fine. Don't care. 3, 4, 5. Yeah, see, I got a terrible feel. See how, I was trying to do too many stock, but see how this is the break. I should have been long from here, which would be a break even. I got a terrible feel at 150. That was my mistake. It's really hard to do too many of these at once. Probably should have focused on just the top couple. Yeah, I'm pretty much writing off Clean Spark. And I'll give this like maybe an hour max. Market open at 8:30 Central. Come 9:30, if it hasn't triggered, I'm out of this thing. You can really abandon them after 30 minutes if you want. It should just go. This one really went kind of too far too fast, right? In the first 5 minutes, it ran another 22%. That's probably the bulk of the move here. See if BJDX can come back. Now, if it makes a new high, we might have something still, but if not, we'll just abandon it. Fuel cell, same thing. Nice tight little stop on here. Fuel cell had a gap down July 8th. Do you think it will fill? I am not a big believer in the gap. What he's talking about is there was this day where it opened here and gap down, and people say, oh, it's got to fill that gap. It doesn't have to fill that gap. There is no rule in the law of physics or stock trading that gaps have to fill. I don't know where that belief comes from. I'm sure the odds are eventually most gaps are filled because stocks travel around a lot, and I could be wrong. I don't put a lot of faith into that. Oh, well, there's a gap over here. It's got to eventually fill it. Now VMAR's it looks like it's coming back. If you guys are still holding, you're sitting pretty. If you haven't sold any VMAR yet, right? It may not be a bad time to take some off here. Clean Spark's an absolute dog. I'm no longer interested for the day. It's off my list. TSCM is rolling down, breaking the downside of the opening range, which is the exact opposite of what we want. So if you want a stock to short, I would consider shorting Tower Semi here in the exact opposite. So you would sell short now, put a stop loss up here. You want to see it? Let's see. Let's see if it'll let me sell some. Let's do a small position, like 100 shares. That's kind of a big position, isn't it? Do like 50 shares. All right, let's sell short 50 shares. And then we're going to put a buy stop. I'm going to cancel this other order. Whoops. We don't want to buy on a sell sit there. Let's cancel this order. So I'm now short Towie Simmer. I should have been short from 265. And my buy stop, meaning I'm betting this one to go lower now. Okay, my buy stop is the high at about 275. So I'm putting buy stop. And if you're not used to shorting stocks, don't worry about this part. Okay, it's betting on them to go down. It's just the exact opposite. I'm selling to get in, and I'm buying to get out. I'm hoping it goes lower. But it's the exact same principle. The opening range breakout, just basically an opening range breakdown, I guess. On fuel cell, give us some life. Now again, I've got a tiny position. It's 100. It's worth $2,000. It's nothing. But if it were larger, I'll say, okay, well, it's made a run. It's got a natural reaction. As soon as it breaks this high, as soon as it makes a new high of the day, my stop loss goes to here, the swing low, because the sellers have come. If they are exhausted and start to run, it should not go below here again, right? Now, I don't know what's going to happen here, but if it gets up here above 2290, my stop loss is coming in tighter. It's going to be roughly break even. This one's just not really doing much for us. Our short's making some money. Why didn't Vera move after FDA approval? Yeah, I don't know. It didn't move near what we thought. The price targets obviously are longer term. So this is a stock I did a video on back when it was like 35 bucks. It's up. And I love the comments, people going, just admit you're wrong. You're terrible. I bought at 35, I'm only up 20%. And I'm like, I'm so sorry. You're only up 20% this month on the stock. I thought I'd go further too on this approval. My guess is some of this is priced in. And it's maybe waiting on another stage. Maybe want to see the earnings come in. I think it has further to go. But since the news is now out, you're going to want to take the bulk of this thing off now. I know we were going for 80 or 100 and it's only up 20 or 15, right? But buy the rumor, sell the news. So this was pricing in the potential. It has happened. And so we have less catalyst in this thing. Let's check the time on semi. Whoops. Let's go back to my 1 minute chart. Okay. So this one doesn't look like it's going to go. I'm going to go ahead and cancel this one. Shuttle Pharmaceutical. It's been almost half an hour. Just kind of chopping around. And this is what most of them do. It's fine. Like most of them come up and gap and kind of chop around in here. I was only trying to filter down the ones who want to gap and run. The stocks like VMAR that gapped and then ran. Right? That's the move I want to capture. I just wanted to get this little lift. And it stopped me out on the second half, right? If you want to give it more room, I mean, if I had the time to dig into it and say, I don't know, this is big, it could be huge for the company, I'd have just left my stop the other half right here to $1.73 and said, okay, I made 20 some odd percent on half of it. I'll risk, 5 or 10% on the other half. Maybe I only end up making $300-400 today. Maybe this runs and end up making 5,000. You have options. And it's a good position to be in, right? It's a good position to go, all right, I'm either going to make a little or I'm going to make a lot. Feels still kind of bouncing around in here. How do you find the gappers for this morning? Well, what I use is this little moo thing here. It's got I can't really blow it up. There's lots of scanners out there that can do this. Moo has this one. It shows the top gainers and losers pre-market. If I see all of them in here, there's lots of software that can do this. If you really want to come in and spend an hour before you get started in the morning, filter that down to the leading groups. So look for the biotechs that are gapping. Look for the cybersecurity stocks that are gapping, right? the gappers and the big moves. I don't normally get here and trade up in just nothing but opening range breakouts in the morning. This is generally something I do. If all those stocks we scanned through this morning, if okay, this one could set up the next week or two, this one is setting up, and then I see, oh man, it's going to gap up, then I'm going to do the opening range breakout. And that's generally where the big movers are. This is a little stock. It's Vision Marine. I don't know anything about them. What do they do? Design, develop electric outboard powertrains for boats, electric boat segment. That's got to be a tiny market. Like, it's not a stock in a group I was watching, right? When we were looking through some of these biotech names and the cybersecurity names and some of the stocks we talked, like if RPD was gapping, that's a big, fast moving stock and a leading group tearing up the chart. I'm going to give it more room. Checkpoint is a great example. We said, all right, we want to see if this thing can base here, shadow off the lows, breakout, right? It's on my watch list. If I look at it and it's gapping up here at 160, that one, I'm going to do the opening range breakout we just did. And I'm not going to be so anxious to get it off, right? I'm going to get the break. I'm going to leave my stop here. I'm going to let it work because I've been wanting to buy that stock. I believe it is setting up in what could be a multi-week or multi-month move. All right, out of BJDX again. Small loss there. Fuel cell's not really running. Probably go ahead and exit that one. So, we had our big winner. Taiwan's working. We're up another $200 on this one. So, again, you let the short run for the day. I would probably just bring a stop like to here. I don't know. Might just exit this one. I'm not really looking for shorts this morning, but a couple $100. Just take this one off. Exit that for a small gain. But if I wanted to hold this thing short for the day, obviously you could. But we got a strong market within spitting distance of all-time highs. I'm not really looking for shorts right now. Vera's going to market 3 to 4 weeks and waiting for the Origin Phase 3 EGFR analysis to drop in Q3. Once that happens, full approval this year is the next catalyst. Got it. Thank you. That's it. That is built into the trading view under hot list. Oh, it is? Yeah, where they used to have a hot list thing. Where is that? There used to be a hot list. Did it move? Hold on. Is that this? No. Wait, I don't see the hot list anymore. You can do the screener. I need to talk to somebody at TradingView because they changed stuff and I can't find it. I totally agree. There used to be a hot list thing on there, Patrick, that would show those. That's what I would use. Charles Schwab says I have to call them before I place the trade. What's the stock, Danny? What broker do you use to trade stocks with leverage? So the two I use, I'm in Interactive Brokers right now. I also trade with Moomoo. I like their platform a lot. As you saw, they got a lot of really cool tools in there. I really like brokers that integrate to TradingView, only because this is my go-to charts. The charting is second to none. The mobile app, it is the best charting platform by a mile. And so a couple of brokers will allow you to log into your brokerage account on TradingView and place trades right there. VMAR. Okay, so it wouldn't let you buy VMAR. So what you're going to want to do is log in to your brokerage account and search permissions. Now, I don't know where it's going to be at Schwab. They're all a little bit different. What I had to do at Interactive Brokers, let me see if I can log in without the whole internet seeing my account numbers and all. Let me see if I can. Hold on. I searched permissions and just got permission on everything. Whoops. Where'd it go? Oh, come on. There we go. When I log into Interactive, it's got the little 2FA thing I got to authorize. Let's see. Let me do this. Okay. All right. So if I search permissions on interactive brokers, okay, I can cut my account number off. Here it is. So when I search permissions, they have all these little tiers. Like there's regular stocks, there's bonds, there's options, there's futures, there's metals and currency, stock futures, um, foreign stocks, right? And so if I come here to stocks and hit edit, see, you got to have permission to trade these and different ones in Canada. They'll give you permission. You just have to ask for it. It's like a CYA thing. They're coming in and saying they didn't say they knew what the heck they were doing. So I just literally checked everything. I asked permission in every single stock, bond. I don't trade bonds, but I asked for it anyway. So find permissions or just call a support number and say, I want to be able to trade all stocks, foreign stocks. I want to be able to trade leverage stocks, ETFs. I want to be able to trade, small cap stocks, you name it. They just have these guardrails in place to protect themselves because if somebody came in and traded VMAR and you put all your whole 401k in there and the thing falls 50% a day and you call in and go, well, you shouldn't let me do that. I didn't know what I was doing. I didn't know it was a penny stock that trades over. I didn't know any of that stuff. And you could sue them and you might win. But if you came in and specifically asked permission to trade these volatile, risky stocks, that's on you, right? So just do that. Do that as your homework today. Go to whatever your broker is, find trading permissions or just call them and just ask for every single thing. And here's a little free tip for you as someone who used to be a broker. When they ask you how much experience you have, how many trades you place per year, how long you've been doing this, they don't check your answers, okay? It's kind of like if you're going to get your first job and they're like, tell us about your experience. You're like, I don't have any experience. Like, well, we need somebody experienced. And you're going, well, how do I get experience and no one will hire me for first job, right? Chicken before the egg. Same thing with stock trading. How the heck are you going to show you have experience trading options and they won't let you trade options without experience? So if you I'm not telling you to do something risky you don't understand, but if you understand options, if you understand these types of stock, if you understand how they work, just say you've got experience doing it. You know what you're doing, right? Mm. Um. Oh, U.S. markets percent gainers and losers. Okay, I don't know where that is. I'll have to find it. Now, by the way, if you have not already, if the link is below, make sure you are signed up for the Black Ops membership. Right now, yes, I'm doing them on YouTube. 6 months ago, I don't know why. We got a strike on YouTube. I wasn't allowed to post anything for a week. We couldn't do any lives on YouTube. So we had to go back to doing these over Zoom, which is members only. And that could happen tomorrow. If that does, you won't get alerted to it. So join that. It's $5 for the whole year. Yes, we have other higher dollar premium trade alert services at the company. We have services we notify our people the stocks we're buying in advance, exactly when to get in, exactly when to get out. We have all that stuff. We are a business. This Black Ops membership is just $5. There are no strings attached. All right. We have other stuff that costs more, but if you just go to tradewithross.com, pass through all the cheesiness, and just hit join here, it's very simple. $5 annual. It does not renew. People say, what's it going to renew at? What's the catch? I swear to God, there's no catch. Name, email, phone number, credit card. It is just $5, and I'll make the same promise to you I make to everybody else. If you don't think you got $5 of value out of this, give me your address. I will put a $5 bill in an envelope and mail it to you. Okay? All right. All right, guys. Let me go ahead and end the session here. I got a lot to catch up on. This way, I just got back, as I said, from a Disney cruise last night with my kids. Yes, that's what my vacations look like at 43, a 4-day Disney cruise with a 3-year-old and a 7-year-old. But I enjoyed being with you here this morning. Did you guys get anything out of this? I hope you did. Yeah, fuel cell. It's rolling over. All right, not worth it. You get notification of the webcast. Scotty, you should be getting an email and a text, I believe, the morning before this. If you didn't today, it might have been our mistake. These are always on Mondays. Today, because I didn't get into last night, we had to move it to Tuesday. So there is a possibility that didn't get set up. And if that happened, I apologize. But I promise going forward, you'll get notified. I think it's like a half hour before it starts. It's every Monday at 9 Eastern, 8 Central. The Thursday session, every Thursday, 9 Eastern, 8 Central. You'll get an email and a text with a link. Just go straight to that. Can I touch on HSAI? Did we not get the split on this? It was on the split on the 10th. I wonder why that didn't happen. This is interesting. I'll have to dig into this one. I don't know what's going on with HSAI. You got the email, check your spam folder. Okay. You're welcome. Made some money off VMore, learned something. That a boy. Good. Love it. All right. 5-minute trade, help take the guesswork. Yeah, again, it's not the end all be all. Don't like, I've got a trade setup is all I do now, right? But it's something, if you like the fast movers, if you enjoyed what we did for 30 minutes here, make a quick $1,000, go on with your day. It can help you. It's not going to work every time. Some days are not going to be any good gappers. Some days it's going to be too wide. But I really like this on the fast movers, especially if there's a big gap in a good stock in a good group. And when I say that, I just mean any of the groups rising the most, any of the big stocks in that group. So let's say you're going, all right, cybersecurity. I want to follow cybersecurity, right? Here's what you do. You just go to Google. This is very simple. Type in cybersecurity ETF. Every single group has ETFs that track it, okay? Find a big one. CIBR. There's one. They all report their holdings publicly. So all you got to do is look for, there it is. There's their holdings. View 45 holdings. Oh, come on. Anyway, this is inside of Fidelity, but the pub page will have it. And they're right there. They show you which ones they own the biggest chunks of. So this is the ones they're the most bullish on. Just steal their lists. These are Wall Street professionals that have done all the homework for you. And if you do that 20 or 30 times, then you'll have all these lists. Gold miners, leisure and entertainment, lithium, mining, pharmaceuticals, psychedelics, quantum, you name it, right? So there's other ways to do it, but that's my way, okay? All right, guys, listen, I appreciate you all being here. Had a good time with this morning. Hopefully you guys made some money with me on VMore. I will see you next week, same bat time, same bat place, but do not forget to go to tradewithross.com to get signed up. It is just $5. I swear to God, if you don't get $5 of value, call me. Leave me a comment on YouTube. I'll send you your $5 back. I'm that confident in it, all right? Thank you all again. Have a wonderful rest of your week, and I'll see you very soon.